Hi, welcome back to the channel. Today we're going to be looking into NIO and their recent earnings report. If you're new to the channel, my name's Ben. I'm a 19-year-old that's still within its first year investing. I believe Trading 212 have now fixed the problem and you can now make an account, so use my link in the description to get a share worth up to £100. Like I say in all my videos, I'm not a financial advisor and this is all for entertainment purposes only. And before we move on, I just want to say big up to the 100 subs. Anyways, let's get into the video. So currently NIO have reported their Q4 2020 earnings and it came out as last night, the 2nd of March. And since the report, the stock has dropped quite a lot. And if you've been following the channel and you've seen some of my previous videos, I'm currently holding 268 shares of NIO at an average price of $49 a share, being my overall largest investment. Now in this video I want to cover why exactly the stock is dropping off and why I also think now is a brilliant buying opportunity. So if we dive straight into the earnings report and we go through the NIO website when they published it last night, the first thing we're going to be looking at is the delivery numbers. So as reported, there's been a really healthy increase in deliveries from Q3 2020 to Q4 2020, where Q3 had 12,206 vehicles delivered in comparison to Q4 2020, where there was 17,353 vehicles delivered. And if we were to compare the year of 2019 to the whole year of 2020, the vehicle sales over doubled just within this period of a year, where in 2019 they saw vehicle sales of just over 20,000 in comparison to last year's being nearly 44,000 vehicles delivered. So overall we've had an increase in sales, which is really good for the company going forward. Next, looking into how much they're actually bringing in from the vehicle sales. For the fourth quarter of 2020, NIO brought in a total of $946.2 million worth in vehicle sales, which being a year-over-year increase of 130% since Q4 2019, and being a staggering 44.7% increase from Q3 2020. So deliveries are good, and delivery sales all across the board really good. Now to briefly look at the vehicle margin for Q4 2020 was reported to be 17.2%, compared to last year's of Q4 2019 being at -6%, and for Q3 2020 being at 14.5%. So far, delivery numbers are good, vehicle sales are good, vehicle margin is increasing also. Now moving on to total revenues, where NIO has hit an all-time high of $1 billion for Q4 2020, which of course is a 132% year-over-year increase from Q4 2019, as well as a 46.7% increase from Q3 2020. Now, where I think that this earnings report has mixed opinions and wasn't favoured from Wall Street is from their net loss and their net loss of operations. First, let's cover loss from operations. So total loss from operations reported from NIO for Q4 2020 was $142.7 million. Now if you compared this loss to Q4 2019, the loss from operations would be a 67% decrease year over year, which obviously is really good. However, if we were to compare this operating loss in comparison to Q3 2020, it's still better, however it's only marginally better, with a decrease of 1.5%. Now a lot of analysts on Wall Street probably wanted this loss in operations to be a greater decrease than just the 1.5%. However, I've got a really good explanation to why I think this isn't much of an issue, and I'll go over it in a moment. So if we cover the net loss first, and as we know as NIO investors, the company is not profitable as yet. So the total loss for Q4 2020 was $212.8 million for this quarter. Likewise, looking at the loss of operations, this is really good looking at a year-over-year basis, where the net loss has decreased by 51% from Q4 2019. However, if we compared it to last quarter, it's not looking too great. The net loss compared to Q3 2020 and Q4 2020 has gained by 32.6%. So you might be sitting there thinking, well, is NIO losing money? And are they going backwards? Well, this is my explanation for it. If we go and look at their operating expenses, it shows that they're spending a lot of money on research and development. My personal take on this is that the company are investing heavily into themselves and in reinvesting as much as possible and looking more at the long-term growth of the business. To some extent, I am quite happy to think that this is true, as it shows that they are focused on expanding the business as much as possible and not worrying about making a profit within the near future. Similarly to Tesla, where it took them years before they actually turned over a profit, and look at the size of Tesla right now. NIO are probably more focused on, for example, their new factory, the ET7 coming out, and just in general improving the development of their products and their services. So if you had to ask me if I'm worried whatsoever on NIO, my answer would be no. Just by looking at the basic fundamentals of the business and at the market they're currently operating in, NIO has the potential to be a huge company in the future. One of the main purposes of the company is to simply just provide a more eco-friendly environment to the car industry. And where they hearted in? The place that has a quarter of the whole world emissions. And with talks of them expanding to the US and Europe, NIO for me is a definite hold, and the price on its stock right now, I believe, is a really good buying point. And by going forward from this earnings report and looking at the past 2 months for delivery numbers, I believe the company has got a massive future ahead of itself. Briefly, I just want to touch over the deliveries for January and February. Deliveries of the ES8, ES6 and the EC6 were 7,225 vehicles in January of 2021 and 5,578 vehicles in February of 2021. So, a very small decline between the 2 months, but representing a strong 352% and 689% year-over-year growth respectively. In February of 2021, the deliveries consisted of 1,327 ES8s, the 6-seater and the 7-seater flagship premium smart electric SUVs, 2,216 ES6s, which is being the 5-seater high performance premium smart SUVs, and 2,035 EC6s, being the 5-seater SUVs. As of February the 28th this year, cumulative deliveries of the ES8, ES6 and EC6 reached 88,444 vehicles delivered. So what we can take from this is that vehicle deliveries are increasing despite the small blip between January and February. Anyways, like I say in all my videos, this is just my opinion. I'm not a financial advisor, and don't listen to a 19-year-old kid behind a screen. I hope you enjoyed the video. Again, smash the like button and sub to the channel, it'd be greatly appreciated. Anyways, I'll see you in the next one. In a bit.